Last week, the Australia dollar-yen pair reached its convergence point. Congratulations to those who took profits. Now, let's take a look at the financial market forecast for the week from November 10th to 14th. A market lost in the dark, uncertainty and doubt. With key data missing, where will the markets head next? This forecast is based on a statistical analysis of data from the past 200 weeks covering currencies, interest rates, and 17 other financial markets. So, let's begin with this week's convergence points, or in other words, the target levels for taking profits. USD JPY is 154 yen and 11 sen. EUR JPY is 177 yen and 98 sen. AUD JPY is 100 yen and 1 sen. Nikkei 225 is 49,588 yen. Dow Jones is $47,003. 10-year JGB yield was 1.66%. Gold was $3,948. We expect the market to converge around these ranges. U.S. market developments. The U.S. markets opened weak on the weekend, following the previous day's decline. However, optimism grew toward a possible deal to end the government shutdown, and stocks rebounded by the close. An unusual Senate session was held on Saturday the 8th, though vote was taken. It remains unclear whether voting will occur on the 9th, but the decision to continue discussions through the weekend is being viewed as a small but positive step forward. The Fed and the data shortage. Due to the government shutdown, the employment data for the past 2 months have not been released, and the October CPI Consumer Price Index originally scheduled for next week will likely be postponed as well. With data missing, the Federal Reserve faces increasing difficulty in making policy decisions. The AI bubble and stock trends. U.S. equities, long driven by AI-related stocks, are showing signs of fatigue as the initial euphoria fades. In Japan, the stock market remains influenced by AI trends, yet optimism over Prime Minister Takechi's growth strategy and the weak yen have helped Nikkei barely stay above the 50,000 mark. The reality of AI and employment. A recent U.S. private survey shows corporate job cuts reaching their highest level in 20 years. The rapid spread of AI is behind this trend. Once government operations resume and employment data is released, we may see the true impact of AI-driven labor displacement reflected in a rising unemployment rate. Despite this, Fed Chair Jerome Powell continues his hawkish stance. Still, some analysts expect an additional rate cut as early as December. Outlook for the Japanese market. As the new week begins, Japanese markets are likely to follow the U.S. lead, opening stronger, with higher stocks and weaker yen. However, with major data releases likely delayed, markets will be navigating in the dark. At key technical levels, traders should be wary of manipulative moves exploiting market uncertainty. The possibility of currency intervention. And as mentioned last week, during phases of rapid dollar strength and yen weakness, we should keep a close watch on the possibility of currency intervention. Please note that this forecast is purely the result of a statistical convergence model, and we take no responsibility for any investment outcomes based on it. That concludes this week's financial market outlook. We'll continue bringing you data-driven, statistically grounded forecasts. Let's see you again next week. Thank you for watching.